If you've been trading in the markets and you're trying to make money, maybe you're swing trading, day trading, you're trying to figure things out, maybe you get into the options a little bit, then I have something for you that you might be very interested in. Just yesterday, I put on a trade in the afternoon. I went to the beach, I hung out with my friends, I had a good time. I come back today, I see the platform, I'm up $540, 90% of the trade already done for me. Now, this type of concept, it actually works a lot better for you because there's more ways to win than lose in this type of trading. Now, I see this setup over and over and over again. I do on my channel a lot, and I had a perfect example right here. So in one day, I've made 540 bucks, and in this video, I just want to break it down for you, show you exactly how I do it from start to finish. It's a lot less stressful. I'll give you the concepts so that by the end of this quick video, you're going to have kind of a new idea and a new way of looking at the market, something that might work out for you and provide a lot more consistency in your trading. So stick around. I'm going to break it down for you right now. Okay, so we're looking at AVAV, AVAV, you can see up here. And basically just yesterday, I saw this popped up on my chart. So I have a scanner set up to kind of look at different stocks that have popped up well beyond the Bollinger Band. Now, just keep it super simple. 90% of the time, when a stock wants to get out of the Bollinger, that's the blue lines here. When it gets out of the Bollinger Band here, when it gets out of the Bollinger Band here, when it gets out of the Bollinger Band here, and it gets out here, what happens? It comes back in, right? It gets out, it wants to come back in. It gets out here. Now, this did a little bit of a run here, but it wants to come back in. This, it extended out beyond, it wants to come back in. Same thing here. Over and over and over again, if you look at your charts, with a simple Bollinger Band on there, you will see time and time again that when a stock gets beyond the Bollinger Band, it wants to come back in. Now, when you have something here that has just been mulling about with no volume whatsoever, and it all of a sudden, yeah, okay, it had some earnings and stuff like that. They weren't incredible or anything. And it just blasts out of the Bollinger Band like that. Most of the time, a lot of the time, not all the time, but a lot of the time, you're going to see it cool down. So over here on the 15-minute, right, you had this huge bust up, and then you're going to see it cool down. Now, this happens over and over and over. I do this all the time. So what I know now is when I see something like this, and it's just kind of chill like that, and it busts way out over the Bollinger Band, there's a 90% chance that this stock's going to want to come back. So what do? I sell calls. I sell vertical spread calls up above the price. So I just come over here to trade, and I sold, you can see here, I sold 3 of the 120 call. So I sold the 120 call. I sold the 120 call, right? And I sold it for $3.87. And then I buy the 125 call for $1.87. Well, if I'm selling something for $3.87, that means I get $387 in credit, and I have to pay $187. Well, there's a difference there, right? The difference between the two actually allows me to make a credit. So I actually get paid a credit of $600 because I had 3 of them and it was a $2 credit. So $3.87 minus $1.87, $2. So if I'm selling 3 contracts, it's $600 because each contract is $100, right? So $3.87 minus $1.87, I actually get credited into my account $600 when I make this trade. So I sell it. Now look at what they're worth. This one's worth 40 cents and this one's only worth 12. Why did that happen? Because when I'm selling something up here, the price is way up here, right? So let's do a 15-minute right on the big chart. So we have a 15-minute right, and it's way up here. Now, if you were looking at this chart and you thought, oh, I'm going to buy this. Look at this. Oh, volume came in. Oh, they had good news. I'm going to buy this. This is going to the moon. That's the wrong way to think. Because if you go to buy this option contract right here, and then it starts to go against you, what happens? You bought the option contract because you think it's going to fly to the moon, and it goes against you, and you start to lose money. You lose money because you bought the contract, and you start to lose. But if I sell the contract, if I sell you the contract even, and I sell it up here at 120 with a good credit, I have a $2 credit on it. Well, as this option starts to come back down to down this way, the value of my option it gets worth less, right? So it went from 387, you buy it, you think it's going to go to the moon, now it's only worth 40 cents, you're down a whole bunch of money. You're like, why didn't it go to the moon? I don't get it. It didn't go to the moon because it's way busted up beyond the Bollinger Band. Look at how far out extended that is beyond the Bollinger Band. Yes, it could go for a couple more days or something like that, but eventually it's going to have to come back down to reality, right? Luckily for me, it happened the next day. So that's good. That's a nice, good trade. But, you know, even if it went for 2 more days or something, it's going to have to come back down. So I want you to kind of change your mindset from, you know, oh, this thing's going to go to the moon, I'm going to get it, and buy a contract or buy the stock. No, you want to chill out for a minute and you want to sell the options. So you can see here, I'm up 1,041 on the one that I sold. So I have a credit because I sold it at 387 and now it's only worth 40 cents. I can actually make money. It's like shorting a stock. Same principle. This one that's $1.87, okay, I'm losing. I'm down 523. But the difference is 517. So you can see here, I was up 540, now it's 517. It's rolling around a bit, but I'm up. So I make 517 on this trade when I get out. Now let's analyze it a little further. Or let me just show you this real quick. If you want to go sell this thing, you kind of look for something around maybe the 30 delta. But sometimes when I see something that's this overextended, I actually sold it right in here. So literally, like the yesterday when it was right here, I said, okay, I'm gonna try to get a $2 credit on this, and it popped up on that, and I took off to the beach for real. I took off to the beach and I had a good time because it's like, you know, nice here right now, and I got to enjoy the weather before the winter comes. And so luckily I was able to sell it at $2 credit, and then it almost instantly started to fade. So I'm able to make that money on that. Now, if you want to analyze this a little bit further, we can come here and you're going to see these. This is in the Analyze tab. So what's this showing me? The blue line is showing me at the end of expiration, profit and loss. So I actually sold the September 15, the 15 September contracts. So there's about 8 days remaining on this. So it's showing me, see, I would actually make, on my trade, I would make $600. So as long as the stock is below essentially 122, 121.97, I'm going to make money no matter what. If it gets below here, then you can see my profit is always $600. So as long as the stock in 8 days on expiration is below 119 or 120, I'm going to make the full 600. In between here, we're going to vary a bit. And then the purple line is showing me real-time profit and loss. You can see here I'm up 517 right now. I can also play around with probabilities. I have an 89% probability of success on this. Now, that doesn't mean that the price can't just take off on me right now and whip up and go crazy. But it's showing me that as it stands right now, I have about an 89% chance of success. Now, I've learned over the years that when I'm up, 90%, 85%, I just get out. I'm not going to wait for 8 days and, see this thing kind of bop around here and then all of a sudden some more news comes out and they rip it up, because this could be a good long-term stock to get into. I'm not sure. But in the intermediate, right now, there's going to be a little bit of a wave down, a chill out, needs to chill, get back inside that Bollinger Band most likely, and then it's going to go from there. So I'm just going to take my 80. Once I hit like 75, 80%, I just want to get out of the trade and be happy with that trade. So basically, I'm just going to be able to sell this thing off, or buy it back. I'll make 517, or maybe later today I can make the 530 or the 540 like I had just before I started this video. And that'll be it. It was a one-day trade. I took off to the beach. I had a good time. Now let me show you why you can win a lot more ways. See, if you have this trade and you just buy the call like I was saying before, you have to have that stock absolutely rip up here and go crazy for you to actually make money. So there's really only one way for you to do it. It has to be quick, it has to go quickly, and it has to keep going. Now that can happen for sure, and you'll make a little more money that way. But usually as you spread it out throughout the whole year, you're gonna have a tougher time with that. Whereas when I'm selling the options up here, this stock can kind of go sideways like this. It can work its way down slowly. It can do what it did today and just kind of tank a little bit. It can fly all the way back down here. Maybe there's some bad news. There's like 3 or 4 different ways where I can win, and it could even come up a little bit. Like it could still come up from here right now and come up to like 120 like I showed you, and I'd still be making money. So there's many different ways for me to make money when I'm selling options. There's only one way for me to win when I buy it. So hopefully that kind of gives you a good idea of, a different way of looking at the market and understanding, having probability stay on your side, and kind of making trades that are less stressful. Take off to the beach, enjoy the day, and then hopefully the next day it's popped right down for you exactly how I want to see right here, and we make the 500 bucks. So thanks for sticking around this long. If you don't mind, like and subscribe. If you find some value, it kind of keeps me going here. I appreciate it, and have a great day.